Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And if you're looking for undervalued investment opportunities or financial education, click subscribe, join me and our community to ride this commodity bull market up together. I want to go over a couple things. There's some comments here. I'm going to read two comments and then give you my opinion. I do think it's important to touch on this and where I differ than a lot of other people. So one of the comments is, I think energy required to move towards this new Green Deal is going to be more inflationary than housing, as an engine of inflation and monetary generation. Demographics are there, but for housing, but massive energy consumption to move towards the Green New Deal and India and China coming on with their economies. So what this person is saying, or the comment is, the supply demand for oil is more inflationary than the housing market. And I'm going to disagree. The only way money gets into the system is through loans. Money doesn't come into the system through the supply and demand of oil. So you can have temporary price differences between different commodities, but that's not inflation. Monetary inflation comes from the expansion of the money supply. The only way that you can get expansion from the money supply in a fractional reserve lending system is through the housing market. It has to come through the housing market. And that's why we've got these large cycles of real estate and economic cycle, all basically cascading past the housing boom, an expansion phase of the real estate. So inflation, in my opinion, comes from real estate, through fractional reserve lending, through the commercial bank system in an expansion phase of real estate. And if you guys have been on the channel, you definitely know my opinion on that. Now here it says, Kathy Woods has added again, deflation, cyclical deflation. We're going to see stronger dollar. The whole idea of Fed printing is flawed. Bond yields depressed. Reverse repo soaking up extra liquidity. But then, Andy, I know you're right in the longer term. So the fact that we've got a global reset with most economies coming back simultaneously, I think there's a lot of confusion. We do not have deflation. I mean, if we have deflation, why are home prices going up? Why is the price of gasoline going up? Why is the price of everything I see is going up? Everything. The best indicator for any of you that want to follow is just what's happening in the real world. Are things getting more expensive or cheaper for you? Put in the comment section if it's getting more expensive or cheaper for you when you go and buy whatever it is. I just paid over $4 a gallon in gas for premium for one of my cars. And then my other ones they're probably mid $3 to upper $3, depending on where you get it. For 85 here in Colorado. Now, Kathy Woods thinks that deflation comes from lowering prices. Monetary deflation does not. And you can have deflationary pressures. How can I say this? It's not even deflationary pressures. You can have prices go down. That doesn't mean it's deflation. Deflation is the contraction of the money supply. Inflation is the expansion of the money supply. That's how I view it. That's the old definition. That's the Austrian School of Economics viewpoint. I think they're right. These other people who take on different definitions are 100% wrong. We have not had deflation in my lifetime. We might have for like 1 or 2 quarters of a very just below zero, and then it comes right back. I think the inflation rate is probably closer between 5 and 10%, somewhere in there. That's previous inflation. Now it's way past 10%. There's no way it's everywhere. Everything I buy is like 10, 20% more expensive. They either shrunk the product that I'm buying and kept the same price, or they just ramped the price up, or the combination of both. They shrunk it and they cost more. So I think the price inflation is going to accelerate, not decelerate. And she thinks that deflation is going to come through technological developments. by definition, that's impossible if it's monetary deflation versus inflation. Now, prices could be lowered of some things, but I don't see it. I see weaker dollar. I see a problem coming. I don't know how the Fed's going to get out of this. They're backed into a corner. They're screwed. Like, they can print money. If everything collapses, like it did in 2008, 2009, they can print a bunch of money, and that money can go into undervalued sectors like stocks at that time. Because at that particular time, when they were printing money like heck, the housing market was already in a bubble, and we were in a recovery phase in 2008, 2009. If we were in a recovery phase, the money is going to naturally flow into the stock market and technology companies and all that. And it did. And it's flown. That money has flowed into those sectors nonstop since 2008. And interest rates have declined during that time frame. That's all because the housing market was in this big bubble. We are not in a bubble anymore. We are in an expansion phase of real estate. The paradigm has changed. It's game over, in my opinion, for those areas. As we'll call it the S&P 500, Dow, and technology stocks. Interest rates will go up. They can try to manipulate it down for as long as they want, the 10-year. I don't know if they're in there buying it. Maybe they are, maybe they aren't. But at some point here, if we continue to get inflation, if we're continuing to have low inventory in real estate, if prices continue to go higher in real estate, if we have to build new homes, create all that loans, and we have inflation, interest rates will go higher. All of this is going to rotate, and I don't know how they're going to keep it up. I have no idea how they're going to prop this up. It is going to fall. The S&P 500 is going to fall. The technology is going to fall. I don't know when, though. I'm not calling tops. I don't know when exactly this is all going to, like, the actual timing of everything. I can just tell you, watch yields. Watch TNX. Watch that, and if you see a big move higher at some point, it's game on. And you're going to see people get afraid. They're going to start running to commodities and precious metals. It's going to be a run. And the way that I'm viewing this is you're either in or you're out at that point. These sectors are not very large. The bond market's gigantic, and that's where the rotation of the bond market, the money coming out of that is going to flood somewhere. And it's a lot of money. That's where the rotation's going to happen. Stocks, same thing. It's going to rotate out of stocks as well. It's going to go right into commodities, precious metals. I just can't tell you the exact timing. We are early in this game. We just broke out of all these major patterns. It's game on. Now it's just, when is it going to happen? I'm sitting in these, waiting patiently, twiddling my thumbs, clicking refresh on the portfolio because I'm just waiting. The money's not in commodities right now. It's going to come flooding in. And I know you've seen a little bit of money moving into energy, and you can see how big energy is moving. And a lot of people on the channel who are in energy, oil and natural gas, you're seeing these things go up. And they could have a pullback at some point, but we're still cheap. Gold, I think this stuff's going to get revalued quick. We could see a very big revaluation very quickly. Because right now everyone's kind of positioned in the stock technology. They're kind of believing the Fed. Now, once people find out that the Fed is full of hot air, and they rotate very quickly here in terms of, oh crap, the commodities are continuing to go up, I think you're just going to see a flood. Like, you're going to see this huge reposition of money very quickly. And then it's going to be like, oh my God, what just happened? So that's what I'm looking for. I don't know. I can't envision a deflationary scenario. It just doesn't happen. I can't do it. If we actually get like deflation, what do you think the Fed's going to do? They're going to go nuclear. They're going to send like everybody $10,000 checks. They're going to be like, flood the system. They're going to respond. I don't know how you're going to have this deflationary cycle happen. And I hate to say it, but technology, it's not that deflationary. I mean, you still have all these goods, and if everything's getting harder to extract out of the earth, I don't think technology is going to help you. I don't think technology is going to save our energy shortfall in renewables. I don't think technology is going to save us from trying to store electricity. We're still going to have to do electrolysis if we want, like a hydrogen economy. We still have to build all these batteries. I don't think it's possible to build the batteries. I don't think we have the minerals in the ground. I don't think we have the copper that we in the entire world to extract at the rate that they want in the time that they want it. You look at the copper demand. I mean, we've got old mines going down to like 12 million tons by 2040, and they want over double that. They want 25, 26 million tons. That's way more projects than what we have in the pipeline. Where are they going to get it? They're not going to get it. They're not going to get that. And oil, you better hope we can continue to extract oil at ever greater quantities, because if that starts to decline, good luck. Good luck. Oil would be one of the best investment opportunities with precious metals, or any metal that's above the ground and in your hands. Because if we run into an extraction scarcity of oil, and I think it's going to happen in the next 10 years, probably around 2030. The exact timing, not sure. But if that starts to decline, I mean, this whole system is predicated off of growth, future price to earnings ratios, future ever greater quantities of debt in the future for treasury bonds and all these things. If we run short on oil, if we hit peak oil on the supply side and start to head lower, everything is decimated. Dollar goes to zero. Bonds go to zero. Stocks go way down, because now they know that energy is scarce in the future. What's going to prop all these up? It's all predicated off of future growth. And if they believe that the growth in the future is smaller than it's going to be, it all needs to get discounted lower. And then you're going to have this huge, everyone's going to be scared. So, and I don't know if that's going to happen. I'm not saying it's going to happen. I'm not predicting that. I'm just talking freely here that could be a possibility, and that's why I hold so much physical metals. Now, another thing that I want to talk about on the physical metal side, if we go to this other currency that's all traced, I hate traced stuff. I don't want to be traced. Privacy is by far what I like. Physical metals out of the system is the most private investment you can have. You're out of the system. They can't trace it. There might be a huge premium eventually on physical metals because of that reason. If we go to a crypto Fed coin or whatever the heck it is, there could be a huge premium on the physical metals because you're out of the system. It's all, it's all to the outside of the system and is the most private thing. It can't be traced. And perhaps there's going to be a massive premium on that. Maybe. I don't know. That's why I own it. There's no downside to it, and there's a bunch of upside. So why not just own it? That's my take on all these things. So if you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.